Hey everyone, welcome back. In this example, I want to show you how to implement session lows and highs and previous day's highs and lows into a strategy where price is kind of moving sideways. First thing you want to do is obviously just quickly turn on your session breaks and basically just see where the daily highs and lows are. So you can mark these out and you can mark the lowest point out. So when you see all three sessions line up like that, that'll 100% get run. There's not a doubt in my mind. If we go back to our imbalance concept, wicks are imbalance. Where would I pull this to? Right tight to these sessions. And I'd probably go a little bit below. Same thing on the upside. Wicks are imbalance. So this kind of identifies our range and shows us where we want to be working toward. Basically where we're working within the range. We should be black. I can actually turn those off. So now that we have our highs and lows mapped, we're just gonna play the session forward and basically see what Tokyo does. So back to our talk earlier. The safest trade is once the Tokyo session is broken. If price happens to rocket right through it like it did right here, your next safest place to look for a trade would be somewhere in here. Likely somewhere here, maybe on something lower time frame. There was something that allowed you to catch a quick buy, and in that sense too, this would be the POI that put in your last low for or last high for London. So where this POI fails, this supply would become the new area I would want to go the other way from. And if we continued buying, then this POI needs to hold. So in this case, we get a body break, we get multiple drives into it. You would be looking for sells. Now, if you didn't get this body break and you had this wick and price continued up, you'd probably keep buying and run the session high. So hope that kind of explains some things. It's really nice when price just does this and comes back to exactly what broke it, but it doesn't always do that. This here isn't always easy to catch if it didn't sweep. This is actually an internal range liquidity concept. Like I said, they're not the easiest thing in the world to catch. I don't get to trade London, so I don't really worry about it too much. But when I back test these, you really have nothing to go off other than your reactions towards the bottoms and tops of ranges. So really good thing to do if you're trading London is either keep the indicator on or just mark the top and bottom of Asia and watch how price acts when you get close to those areas. All right. So let's just play price forward. All right, Frankfurt opens. You have a pretty aggressive open to the downside. With your candlestick language, if you're an aggressive trader and you're looking to get in, this may be the first confluence to look for shorts. If we're looking to be smarter and safer, let's wait for it to break out of Asia. All right, so the aggression continued. To me, this would be your POI that took out Asia. You have imbalance, obviously. There's likely an entry there on the 1 minute when it broke out of Asia. Be really careful with those because what those are is their inducement for that. So now we can pull the imbalance tight to the inducement. So everything inside there's free game. Now you got a lot of aggression, a lot of momentum. It wouldn't take much to sell me a sell at this point. And since you broke out of the range so aggressively, my target would be the equals, which is also your major. Seeing how price has been ranging, we've identified the top and bottom of our range as this and this. So now everything in between that is fair game. Notice how we haven't chatted a lot about trend. We know Euro USD is bearish. We know it's currently in a bit of a bullish pullback, but it's moving sideways. So this is a very rangy market. It's a very tough market. So this is where sessions and a little bit of liquidity can help us navigate these areas. Again, it's not going to be crystal clean every day, but more often than not, you'll definitely get something. All right, so we get our first reaction into our imbalance. This might have even been one. Maybe we didn't pull imbalance right. So it's either the first or second, but we'll just go with first. We'll say now this is our second. Still going up. And I would probably market execute this. This is the flip zone that took out Asia. So I would have no issues with executing that. I'll give it a bit of room to breathe, maybe. And I would have no issues looking for this major. So one thing to note is when price is showing aggression like this, when it comes into an area that took out a session high or low, you're not going to get a chalk a lot of the times. Price will just continue on with the aggression. And you could see we had bearish aggression right out of the get-go. So that's that. Probably wouldn't be chasing stocks too low down this leg. I don't know if you got one. So you got first tap into the POI. Definitely would avoid the first tap. You're looking like you actually built a bunch of liquidity to run here too. So I would just avoid that, even though you got that nice reaction. Second tap. You got your chalk. Notice how when you broke here, all of this started happening. Unless we see some more aggression up, this might not be the best chalk. All right, so that's not bad. We got our push up. You are getting close to the London kill zone ending, but we're still in it. This is second tap. Again, they're not as high probability as the third. But being that we're in our kill zone, we could say we'll play their reaction maybe. See what we got. See what the next one looks like. Yeah, let's try it out. You are at the end of your session timing, so this would likely be my only try. Third tap's always better, but I would have no issues going for that. Alright, so there's your third tap. That one hit stop loss, no big deal. We'll just delete that. Totally a legitimate trade. We'll fast forward a bit and let's just carry on and let New York open. So New York opens. To me, this would be the last supply that gave us a drive down. could almost say this is your chalk. This whole area would be your POI, and my imbalance, you could say it goes as high as here. You wouldn't be wrong. I'm just gonna pull it to here and let's see what we get. It might be a little bit intense actually. Let's just see what kind of reactions we get in here. Whoops. All right, so let's go to our one. So what this was what you call a trap. A lot of people would have pulled this as a supply zone and looked to continue down. But we know that we just ran 3 sessions. We ran a major liquidity point, major liquidity run, major move. So we know what happened here was to induce people into selling. That's not the real move. If this continues down from here and it breaks that, you can always look for a continuation in there. Although, with what we know about previous days' highs and lows and session highs and lows, and we see these wicks to the downside, we know the probability is higher that we are going to continue up. And this was a fake move. So we'll retract these guys a bit. And in this POI, everything up to here would have been imbalance. Could have you looked for a sell? I mean, if you wanted to, yeah. This is your first tap. You got a really aggressive reaction. I'm more looking for buys because we ran the previous day's highs and lows. All right, you got to drive into the imbalance. All right, so again, we got a really aggressive reaction from the first tap. Not quite enough. So price is still kind of climbing here. Let's just see what happens. All right, so price is still climbing. What I'm seeing is liquidity buildup. Where is it? So one of two things is going to happen. Price either continues on going, or we grab this liquidity and then continue going. And obviously, we could get more reactions here. When you see a really aggressive V-shaped reaction like that, though, price doesn't always come back. That's just one of those things. And now that we get a run on that, I'll probably have no issues executing that. It's pretty decent. I'll give it a nice coverage. What is that? Let's go to a full 4. All right, that's totally fine. Would probably re-execute that again. I don't think we're wrong. Just one of those things. All right. So now we also have a chalk off this area. So I know that there's a very high probability this chalk is going to get retested. So I'm going to leave my stops open. And to me, I'm going to pull tight to this candle as a POI. So we can use that as the inducement. Block line. Cool. Just delete this guy or retract maybe. So this guy didn't work out for us. That's totally fine. All right. So you got a reaction. Another one. So if we weren't in this, you could have avoided this market execution altogether and just taken this. This would have been a 100% valid setup. The R's are definitely there. I would have likely covered the inducement and everything. And you could see if we tried a market execution here on the initial wick, we might have got stopped out depending how much we covered. So if for some reason you wanted another trade, I would again be looking at our flip zone. As long as the R's are there. Let's see. They seem like large stops, but they're really not. When you got your targeting in mind correctly, you should have no problem meeting these areas. Now, it probably wouldn't be a bad idea to pay yourself at the Asia highs, maybe even fully close this one out because it's higher up. And there you go. If you really wanted to, you probably could have stacked this. I don't know if I would have chased it up the legs so far, but you definitely could have. You could have hopped in this. I likely wouldn't, and it's probably a good thing you didn't. All right, so you would have got a nice balmy 5.2R or 5.9R. You got a 7.7R on that one, and this one was a nice 14R. I think we took a loss or two, took another one down here, and you caught a 7R. But all in all, pretty efficient way to work a range. You can see I didn't need a lot of confluence to go the other way because we're using these liquidity points as confluence to go the other way. We're using these session lows and highs as confluence to go the other way. We know that when we run a session, we pay ourselves. We know that if we run a session, we could go the other way. And if we don't, we're going to look for a continuation of what took out that session. Just like here, you took out New York, likely something in here and gave you a buy. This is the last, I would say, or this would be your last sort of demand. This here breaks it. I would likely have this guy pulled anyway, as the reason being is we have inducement above it. So you know you're going to get a reaction here or here. And that gave you a trade down. In a case like this, where you're likely targeting the session lows or highs, if it comes down there and you get a candle like that, just close your position on the spot. It's basically a good sign that the internal range liquidity is reacting and it's not guaranteed to break. There's a good chance that it might do this, but usually you see a wick like that, that's a very good sign to pay yourself, take partials, close the trade. You know, same as here. If we were holding this and I wanted to keep holding down, the second I see this wick, you can bet yourself you definitely know it's time to pay yourself. If you didn't, then you see a second wick, you again know to pay yourself. You see this wick, you know that if you're still holding volume trying to be greedy, pay yourself. Wicks speak to us. You know, it takes a lot of money to make a wick. And if we just, so that one kept going for a bit, and that's fine, but your highest probability would have been up to here. And you could probably short this now, actually. Yeah. And this would be back to our first course of your internal range. Liquidity was filled. So if you were really wanting to trade or you didn't catch anything, this would have been a valid area to look for a short. Whether or not you got a decent reaction at an entry, I don't know. So this was first tap. I wouldn't have taken that. This I likely would have taken. It's still within your kill zone times. Being that it is right at the end where New York lunch is, I likely wouldn't be looking for long. But if you didn't catch any of this and you had no trades and you only trade New York, let's say, this would be 100% a valid short as an internal range liquidity filled. And you can see how we navigated through this mess just using session highs and lows and previous days highs and lows and internal range liquidity. There was really nothing to do with structure in there that helped us. If we look at structure on the 4 hour right now, I can tell you it's bearish. Might actually be unconfirmed bullish. So we're unconfirmed bullish, meaning sells and buys are valid. From a 4 hour perspective, you can see how corrective we're moving, whereas this was really aggressive. Anytime you get this corrective stuff, that is liquidity being stacked to be run. And there she goes. There she goes. So very corrective, no authority. And you can see how much more aggression it had every time it moves down by the candle sizes. So, yeah, I hope that makes some sense to you guys as to how to navigate ranges and use your previous days, highs and lows, and sessions. You're not going to get these crystal clear setups every day, but like I said, 2-3 times a week per pair per session. It's pretty legitimate. You likely get 2-3 London setups that are really clean, 2-3 EU setups, and everything else, you know, it's all dependent on your trade plan. So yeah, I hope you guys enjoyed this, and this is definitely something to backtest. The latest backtesting session that we did from Sunday implemented a lot of this stuff already, so it's something you can look into. I'll leave that backtesting session up for you guys. Definitely check it out. And I hope to see everybody backtesting this to see if it's something you want to implement to your strategy. I know I did, and it made a world of difference. So yeah, I hope it helps you guys out too. If you have any questions, just let us know in the Discord.